So our style of trading at Bulls on Wall Street is a momentum-based trading approach. We typically are looking for and trading the hottest stocks in the market. So when I mean a hottest stocks, right, that's like such a shitty term. But what I mean is like the stocks that have the biggest range, the stocks that have the most movement. And I'm not talking about like your penny stocks that like are just up like 200, 300%, but I'm talking about like things that you can really build on, like meaty things, meaning regular companies, mid-cap companies, some maybe even small cap companies, but they're actual real companies that have some type of news out, some type of catalyst out that can propel them to move in exaggerated ranges. I very rarely trade small cap stocks. Every blue moon, I do dive into it. I would say like maybe once a day or once every couple of days, I'll dive into it. But I don't dive into it a lot because there's no money in it. Like, you know, you can do it for fun, but there ain't no money in it. I know like a lot of times if you're on social media or the tweeters, like you'll see like all these like small cap traders and they're like, oh, I made like $30 million, right? It's impossible. LeBron James makes $30 million. The CEO of Goldman Sachs makes $20 million. So like there's not a guy on Twitter like sitting there trading $2 stocks, making tens of millions of dollars. And every one of my best friends is a trader. And there's a handful that I would trust. There's a gentleman at Investors Live who's really good, Nathan. And there's a handful of them that are really good. But like, no. And he is probably the best out of them. But no, there's nobody that's making $20, $30 million trading fucking small cap stocks, right? That's just, it's not in the realm of it. The problem with, you know, trading really, really cheap stocks is it brings in people that are desperate. So what happens is you have a low amount of capital. You think, oh, I have to trade the smallest stock to make money. I want to trade my, you know, change my $500 into, right, something that's like generational wealth. Well, that's just not going to happen regardless. Like it's not in the cards. Like what you need to be doing is thinking about income generation, meaning like, how do I take my money, whether it's $1,000, $2,000, $20,000, and build this $100 at a time, $200 at a time, then $300 at a time, $400, and slowly over time, you can build it. But you can't get that kind of consistency if your sole focus is just trading, you know, penny stocks and things like that. The reason so many people trade penny stocks is because the marketing of it is geared towards people that are desperate. And it's meant to prey upon that. And you don't really want to be, I mean, don't be a victim. Like there's nobody that makes, I can tell you, I've been doing this. See, I got no hair. I've been doing this my whole life, you know, and I've met 2-3 people that can pull it off. So momentum stocks, and you can make just as much money trading $20, $30, $50 stocks as you can penny stocks, if not even more. Even if you have a small account, I'll show you some of those ways that you can. So momentum stocks are the following things. And this is why, you know, we trade them and why I like them. A meaningful PR, some type of news, sector catalyst behind that type of hype. We're looking for high relative volume. What I mean by high relative volume is, okay, a stock is doing 10 million shares a day. Now it is doing 20. Now it is doing 30. So like when you think about like stocks that can really, really, right, make moves. So if you're like, what's a stock that's been like really been cooking and booking right now? What's that fucking thing that was going today? Sorry for the swing, by the way. Like this SPRT. This is probably right the hot one of today. Right, this is like this was a $20 stock in the morning. Like you've got certain characteristics that can take it right from 15 to 30. But one of them is relative volume. So you can see like this stock was really only trading right like a handful of million shares a day, and then all of a sudden, right, it goes 7 million, 8 million, and then it starts to get 30 million, 50 million, right? So when their relative volume starts to go up, meaning it doesn't matter what the volume is, it's about the expansion of volume. Those are things that are really important because that's the fuel that can make a stock go crazy. So we look for high relative volume in our particular names. Now, beyond that, we're looking for breakouts and breakdowns on larger term time frames. So you're talking about your daily charts. What are the ranges of the last month, the last 2 months, so on and so forth. When stocks start to clear levels and then they have a catalyst behind it with high relative volume, high ATR, which means how much it moves around every day. And then it's got a history of making big, powerful moves in the past. Now you're on to something. That's the sweet sauce of big moves. So scanning 101. Scanning involves using a software to filter through thousands of stocks based on criteria that you set around that stock. So price of a stock, the percentage it's moved, the price that it's changed based on the last X amount of minutes, right? Like, hey, I want to look for a stock that's moved 10% in the last 10 minutes, 10% in the last 10 days, right? You need to specifically quantify what you're looking for. Price change based on some type of interaction with a moving average or a VWAP, some type of indicator. Like I run scans continuously on TC2000 on like when things on my watch list are approaching the VWAP, when things on my watch list are approaching the 9 EMA. So I start to get alerts based on that type of movement. So what that will do is alert me and say like, hey, a stock you're watching is approaching something that you're interested in. So I'll get a pop-up on my computer. And what that allows me to do is focus on it a little bit more in case it's going to do some type of big action. It allows you for a time efficiency where instead of spending like hours, like reading reports, going on Yahoo, Googling things, you know, there's like so many different ways to research, but they're all time intensive. And what happens is like when it's time intensive, it means that you can only research one stock or two stocks. And then what that means is that you're really stuck on those two, right? You're like really beholden to them. You're really biased about them because you spent so much time through it. What I need to do is find a way to be efficient. How can I go through the whole list of the gamut of the stocks of the whole world and figure out what fits my needs and do it within 2 seconds? So I have to build a scan for that. So instead of spending hours researching 1 or 2 things, I want to be able to spend an hour going through thousands of things very, very quickly. So we build scans around particular trading ideas. That could be, now I got a few different patterns that we use, but it could be a parabolic reversal. What I mean by parabolic reversal is it can be a stock that's like gone up so far, so crazy that I have to take it down, meaning like I'm going to short it, meaning I'm going to bet on it to go down. I could build a scan around momentum on specific time frames. So when I look at stocks, I look at them on a 90-day, 30-day, 5-day time frame. What I mean by that is I will run a scan to see what stocks are up the most the last 90 days, the last 30 days, and the last 5 days, depending on the type of trade I'm looking to do. I run a liquid gainer scan, which is a scan to pick up stocks like in the morning, meaning it's an intraday scan. So I have different types of trading. Of course, there's certain types of trading I do where I have a big idea, and then I'm going to hold that stock for days to weeks to months. And then there are certain parts of my trading where I may be only looking to hold stocks for a handful of hours. So I want to be able to find both of those opportunities. Out of you guys here, like who's interested more in day trading versus swing trading? Swing trading is holding stocks for 2 days or more. Day trading is holding stocks for 1 minute. My specialty is day trading, but I actually started this business as a swing trader. I just love day trading because I love the action of it. There's no more money in one or the other. Trading is all about, number one, what you're good at. And then of course, like what's your schedule really like? Like for example, like when I first started trading, like I had a demanding job. I was in my 20s. I was like the vice president of a recruiting firm. So I was a headhunter. And so I had to like, I'm like always on the phone. I had meetings and like a team of people and stuff. So like at the time, like I just couldn't day trade as much as I wanted to because I'm actually like having to do work. Right? Like, so you guys can have kids and stuff like that. So like swing trading really worked for me back then. And then what happened is like when I made enough money swing trading, I quit my job and then I was like at home. And then it was like I'm sitting at home and I'm swing trading. Well, the thing is like when you're swing trading, you're holding stocks for like days to weeks. And I made things to do all day. And, I started Bulls on Wall Street and we had a chat room of people and we're like just sitting around all day because like the plays that we were in, they were just going up because the market was so hot, right? Because you're coming out of that recession in 2008. So like, in 2009, like every stock was just going up every day. And they were all like in there, even Bank of America, right? Was like $1 or $2 and Ford was like 50 cents. So there wasn't much to do except just to hold them, right? So we sat there, everybody was so bored. Like we had like a chat room of, 50, 60 friends or whatever. And we were like sitting there and we're like just sitting on our asses all day. And so then I was like, man, I got to keep everybody busy. So I just started throwing out a couple day trades here and there using the same patterns as the longer term trade. And that's when I was like, ooh, this is fun. And so then that's where like kind of my day trading popped in. But you want to build scans around these for both because I believe over time, you should learn how to do both because the mechanics of them are the same. What I mean is that the patterns from swing trading to day trading to even investing, they're all the same or similar. What changes is the time frames that you're looking at. Hey, I'm looking at a really long time frame versus I'm looking at a minute by minute time frame. And I'll go into a couple examples of some trades that I just recently took and kind of show you, what's going on. So